Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Education and healthcare are two crucial sectors in a country as vast and youthful as ours. The edtech sector, which is a subset of the education industry, has emerged as an incredibly appealing segment, experiencing exponential growth, particularly during the pandemic when in person classes became impractical. However, it is important to note that the edtech sector is currently marked by intense competition and has encountered regulatory hurdles along the way. Just to set the context for listeners, in the last 4 years, the number of mergers and acquisition in the country's tech sector has been increasingly moving up. Data shows that the sector observed a total of 8 acquisitions back in 2019. This number then surged to 29 in 2022. Our today's interaction is lined up to understand the factors that are triggering this consolidation and the impact of these activities on the overall health of the ecosystem. We have today with us Anil Nagar, founder and CEO of EdTech company Adda 247, and Kushal Bhatnagar, associate partner, Redseer Strategy Consultants. We are thrilled to have them join us. Welcome. To kick things off, Anil, why don't you give our listeners an overview of the edtech sector's current size, number of players, and its growth trajectory in the country?
I think edtech sector is in a very nascent stage as of now. In my opinion, it has just started evolving. So we can trace the history back to, let's say, last 5-6 years since we started, and since then many companies and many kind of models have come up in the industry. But I still believe that these are early days of edtech in India. In last few years, many startups have tried many models, different kind of models catering to different segments and categories of education. And some are doing good, some are still trying to figure out their right product market fit. So in terms of number of companies, I think there are multiple companies, at least I can think of 20-25 decently big size companies or decent size companies, which I believe are doing good as of now. Number is, in terms of number of edtech companies, India number is quite big. Specifically, if we want to categorize the whole edtech into various segments, so clearly there are three big segments, the way I look at it. So one is K-12 segment, which is primarily around school children and delivering education to students who are going to school, where we have players like Byju's and the multiple other players, for example, Lead School, and different kind of models. Then there is test prep, where companies are helping students prepare for various exams. It starts from let's say JEE, NEET, or CUT, and goes up to UPSC. In between, government test prep, GATE, and all other categories. And then there is upskilling, which is for the people who are in the job and they want to upgrade their skills and they want to move up the ladder. So these are broadly three categories. And first, as I said, Byju's, Lead School. These are two players, two of the big players I can think of. But then in test prep, there are multiple players, including Adda 24/7, An Academy, Physics Wala. These will be big players. And then in upskilling side, there are players like Upgrade or Emitters. So these are the players
Right.
which.
Right. Kushal, would you like to weigh in, share your views on it, given the fact you guys work with a lot of data, especially on the startups side? So, what do you think is the current size? Where are we with the active players?
Yeah, sure. So I think this is our estimates. The B2C edtech market in 2022 is sized around 2.5 to 3 billion USD. Now, this does not include the B2B portion and the financing portion, but the segments that Anil just spoke about, which is K-12, test prep, and higher education slash upskilling. So that's our market size estimates. And if you look at the market trend, it is broadly at a similar levels to where we were in 2020, given there was a huge demand that really came up during COVID, and then there was a
Right.
market correction. So we are broadly there, but we are more stabilized and more corrected now. And going ahead, we should see a more steady growth in terms of overall market. In terms of players, I think it's hard to actually comment on the total number of companies because there are so many startups attached in the space. But I think we understand that there are 7 unicorns, around 8 to 10 unicorns, and at least around 50 companies in that growth stage phase, could be more as well. But a huge flurry of startups. So hard to pinpoint on there are these many hundreds of thousands of companies. It's difficult to say, but yeah, at least 50, 60 sizable companies, at least in the space.
Right. So let's now try to understand the main topic that we are here to discuss, that what is triggering this consolidation? What do you think are the factors? What have you observed from your understanding of the situation? Why is it happening? Is it primarily because of the funding winters? What is it?
Yeah, I think it's a combination of things. This is our understanding. If you go back a couple of years and see how the market really boomed during the pandemic, I think what happened was that with schools shutting down and the colleges and classes shutting down, a lot of people actually came online to study, and this really boomed up the market with new startups also entering the space. Now, when the pandemic receded back and things went back to normal, a lot of people went back to offline schools and offline colleges. And when this actually happened, a lot of these small scale players, they were not really able to generate the lifetime values against the consumer acquisition costs that are actually put in. While some of them were retained, some of them actually went back. Now, as soon as this happened, as soon as the market correction happened and the consumers went back offline, there was a funding winter as well. So the cash situation of some of the small scale players, at least, that became a bit challenging because of the LTV CAC challenges as well as the funding winter, and hence they looked a bit more to divest and get acquired, and which led to a flurry of M&As that really happened in the last year.
All right. And Anil, are your thoughts also in sync with Kushal's?
Yeah, I just want to add that in some cases, it has been actually strategic also, because as I said earlier, that segment is still in nascent stage, and uh, companies are coming up. Companies are in growth stage. So some cases I can say clearly that it is a stage where there is actually acquisitions happening to augment or to actually add value to the parent company in some cases. For example, I will say in our case, we have done 2 acquisitions till now. So first acquisition we did in 2021, which was Study IQ Education. Study IQ Education is a UPSC focused company, and we under 24/7 prior to Study IQ Education, it was government test prep focused company, and we used to cater to almost everything in government test prep except UPSC. UPSC is apparent of government test prep, but UPSC is also unique in terms of building the capability and building the brand, and it takes time. So it was a very strategic thing for us in terms of either build it organically, which might have taken 3, 4, 5 years, vis-a-vis acquiring and fitting into overall Adda ecosystem. So as of now, with Study IQ, we cater to all test prep, including UPSC. One other acquisition we did very recently, which was about which is Viksha, and the Viksha is into AR, VR primarily, and doing some work around metaverse and 3D animation. So in our case, recently 6 months back, we entered into K-12 segment where we launched JEE, NEET, CUET, all these categories, and in these 6 months, we also realized that for this audience who is studying in 11th or 12th and who is trying to understand the concepts of physics, chemistry, or let's say biology, so visualizations and these kind of models where they can also play around with the model, these play a big role in terms of understanding the concepts. So keeping that in mind, we recently acquired this company. So what I can say is that about 2, 3 years back during COVID, most of the acquisitions were with a thought process around valuation or around adding revenue to the company. That is now changing, and it is going more strategic in my point of view.
I would just like to add that I agree with Anil that yes, some of that has actually come up, and at least going ahead, we believe that this will be more measured. We
Right.
definitely saw I think this getting very accelerated in 2021 and 2022, and there is some correction in that speed as well, at least in 2023. And now, whatever acquisitions are actually taking up, they are more measured, they are more thought through.
Right, Kushal. Anil, because you have already acquired two companies, so and you're saying that similar to what Kushal said, that going forward things would be more measured. So what kind of measures would you consider? What kind of strategies would you be deploying when you are considering another acquisition?
So in my opinion, it's very clear that when you want to acquire a company, it should not be just you have money and you want to spend that money. It should be in alignment with your strategic vision. So, for example, as a company, you want to achieve something or you are going in certain direction. So, you want to acquire strength around that. You want to add value to it and let's say expedite that vision with these acquisitions. So my thought process is very, very clear that whatever you do, it has to be in alignment with broader vision of the company. It should not be uh, just to add revenue or just acquisition of a company which is, let's say, running independently and there is no correlation and there is no value creation of coming together. For example, if let's say there are two companies, let's say this is one company which is acquiring second company. So this is one and this is one. If one plus one is becoming two, I think this is not a good acquisition. One plus one should become more than two, three, four, or 11 maybe. So my feeling is that it has to be completely. There should be value creation when you acquire an asset. It should
Right.
not be because ultimately you have to run the company, and if it is already running, and what's the value you are adding by acquiring that company? So value creation has to happen when both the companies come together.
Kushal, do you have any case study that you might have evaluated some of the uh, acquisitions that have happened? How has it worked out for them? Success or failure case to understand this thing better?
Sure, I think we followed a couple of cases recently. One was, and I think Anil also mentioned a few for his own company. But generally in this space, we saw the iNeurons acquisition by Physics Wala. I think that was a good one, specifically looking at how Physics Wala was actually able to augment the point around upscaling in their service toolkit. Physics Wala typically being a test prep player, didn't really touch upon the higher education or upscaling or AI or those kind of areas, right? But then with iNeuron acquisition, that became a service toolkit for Physics Wala, which we believe is working out well for them. Similarly, there was an example around how Create Learning, which is already a Byju's portfolio company, went on to actually acquire Northwest Executive Education, which helped them to venture into the global higher education space. The benefit that Northwest brought to the table was that they had tie-ups with some of these good B schools and renowned global schools in general, and they kind of has those courses and those professors actually teaching. Especially as Anil said, right, it's all about what kind of value creation is being done by that acquisition. Could be about adding more depth in the existing business, or could be about building more breadth in the existing business. Could be twofold, but yes, it should be definitely linked to some kind of allocation.
Interesting. Anil, you also at the beginning mentioned about the different categories that are there in the edtech space, like such as K-12 and just test prep, right? So, in terms of the M&A activities in the last 4 years, where do you see has happened the most? What are the more, uh, you know, segments that see more M&A activity?
I have seen more activities in K-12 segment, and probably that is because of the bigger player, which is Byju's, and they had a lot of money and they could afford to acquire many companies. Other than that, some action in test prep also, where Unacademy also acquired many companies. So these two categories, I will say I have seen more action in past.
Okay. And any trend has its own sets of pros and cons. What do you think are the upsides and downsides of M&A activity happening in this space?
Yeah, I think to some degree, if M&As have done strategically, they actually are a sign of market's maturity. I think if you look at any market's evolution over time, you see generally a lot when the market is really emerging, right? So you see a lot of smaller players entering the market with their propositions there, and then they eventually consolidate with some key players being there and having their place in the specific places, right? So while I think it's still as an 18 stage, as Anil said, right, you see still have a lot of years ahead for EdTech to, but there's still good signs, good positive signs that at least the kind of problems that some of the players face around cash issues or capital issues or profitability with these acquisitions happening and economies of scale coming into picture, ability to cross sell and cross leverage resources, right? Some of these problems should ideally go away, and you'll have some players actually maturing into good profitable models. That's I think is the biggest upside generally for this space. If not done strategically and if done in a haste, as we had already discussed before, then this could have some challenges for the company as well. For example, if there's not a solid cultural fitment issue with the company, that impacts the overall company's functioning, could also lead to layoffs in some cases, right? So these kind of situations also occur. But as if done with the right mindset, the right intent, and with the right due diligence, I think they should work well for the sector.
In the beginning, both of you had touched about how the edtech sector emerged as an incredibly appealing segment, experiencing exponential growth, particularly during the COVID time. However, in the recent times, we have seen decreased funding in the space. We have also seen layoffs. We have also seen shutdowns of startups. So, where do you think are we headed?
I believe that as we are discussing that segment is a bit maturing. It's still, I'll not say maturing, but it's coming in shape because this is a very new category at tech. So I think this is a good thing. Consolidation is definitely a good thing. Correction is a good thing. Valuation correction or model correction, I think this is definitely a good thing. This will eventually lead to some really good companies to come up the curve, and eventually, with the help of even acquisitions and consolidations, stronger companies are going to come in coming times. I believe funding winter, we call it funding winter, but I don't see any such thing for any good company, in my opinion, because we raised our last round in October only, which was, let's say, again funding winter, and even now we get interest from investors. And I think this is not just about us, this is about many other companies. Even a lot of companies nowadays we see that are raising funds. So I think this is a phase where models are getting corrected. Correction is happening. I will say broader correction happening.
Okay.
And because of that, there has been a element of caution from investor side.
Right.
Kind of wait and watch. So that's the situation which is going on. But if you have that proven track record over the years, for example, I will say COVID was a very high point for some of the companies, but many of them could not live up to that. But if we remove that, there have been companies which have been growing consistently pre-COVID also and post-COVID also. So those kind of companies are there which are sustainable and which are being built for long term. Those kind of companies are still attracting attention from investors, and there is investor interest definitely. Valuation is a different part, but if we want to say there's no funding, I think that's not the case. And for good companies, funding should not be a problem.
All right. Kushal, any views on this?
I agree with Anil that this is largely a correction, right? I think we all talk about layoffs in EdTech and they are very high. That's also because the EdTech was also the sector that saw the highest boom during COVID, right? So it's bound to happen that a sector or any business, if that sees a very high accelerated curve, then it's bound to see a downside as well. I also believe and would like to just add that there's also a sentiment around the China EdTech market really not being there anymore, given the government has mandated the China EdTech to be entirely not for profit, right? And which is where a lot of global investments that were, let's say, getting split between India and China EdTech are now, in the future at least, likely to be more focused on India.
Right now, the sector is niche, but for it to mature, what could be contributing factors that can come?
As of now, for a company like us, we are very passionate about education, and we are very passionate that we want to take education to every village and every household. and that can elevate the level of society in our country, and that can completely change future generations in India. But as of now, this whole thing, the complete effort is being done by us as a startup, or maybe our investors are part of it. But from government side, we don't see many initiatives or policies to support education specifically, because education is not just business. It is much, much more than that. For example, the simplest thing I will say, how people think of it, but the kind of taxation we have in case of education. So it's still the same. For example, GST is 18% and all the other things are same. So government can take some initiative. So in earlier days, or let's say if we want to think of schools, which are, let's say, mostly run by government. So government earlier used to think that whatever books are being sold for these schools and all, so there's no GST on that. But when it comes to online, so there is no such policy from government side. And online, you are providing high quality education to a last mile home in Bihar, or let's say Jharkhand. But on the policy side and on the support side, so we don't see much support from government directly. Although in terms of facilitation, in terms of technology, in terms of the ecosystem, government is doing a lot. But directly, I think the government can do a bit more.
Kushal, any views on this?
Yeah, I think I would just like to add that there's one important trend that I think players are already embarking on, which would be important as sector matures and the players you actually expand into deeper pockets, is of hybrid learning, right? I think most of these companies actually started as, let's say, online first players. But if you look at least for the larger companies, the portfolio, some of the acquisitions have actually been of the players that are, let's say, offline first, right? So I think going ahead, the future is probably a more blended learning concept, at least in some segments, in some courses, wherein you have an online platform, you also have a classroom platform that really helps you tap a much deeper and a much larger market, and also helps you expand the consumer LTVs, which has historically been a challenge for a sector. So I think blended or hybrid learning and getting those online offline lines to get blurred, and providing a more complete toolkit to learners, actually. I think that would be one important area for the players to really look forward to.
So on that note, I think so we can conclude today's session. Thank you for joining us, Anil and Kushal. It was an insightful session, and I hope this gives all of us some valuable takeaways.